Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. This is the second out of, I think, about 9 that I'm going to shoot here today. And this one was going to be on what's going on in Europe. There's dramatic things you've probably heard that are going on in Europe. I'm going to hopefully explain that a little better and hopefully let you know how that relates to what goes on in the United States and how that is going to affect you. I didn't mention in the previous video, we're moved into our new office. If you follow the blog, you've seen that. I've got a blank wall here just like the other place. I don't think I've ever mentioned the painting that I always had in the videos behind me, and maybe I'll do that in an upcoming video. We've got a bunch of paintings that Don Tate did for us that are really beautiful. I had one kind of behind me. I might get this room decorated here at some point. But let me jump into the Europe video. But first I do want to mention, if you haven't seen the Coming Storm video, there's a link to watch that for free. It is really important that you understand big picture what's going on, because I'm just going to talk about small indicators that are happening over the last couple months that point to what we've been talking about. If you watch that video, you'll see that some pretty dramatic things that are happening in the world around us were predicted in kind of amazing detail back then, a year and a half ago. So those big picture things still hold very true. Even though we did that video a year and a half ago, things are playing out just like we talked about. So it's important that you watch that. So the European Central Bank, this is mind-boggling. Europe likes to say that they're a lot stronger against inflation because Germany kind of runs Europe, or the European Central Bank, and Europe had massive hyperinflation in the 1920s, and so they are strict about it as a people. But they've tethered themselves to all these different countries who are profligate spenders, and so now they've got this difficult situation called the euro. And the ECB actually allowed Ireland to counterfeit 51 billion euros a couple months ago, just out of thin air. We do it, but it's kind of weird if the federal government just allowed Texas to counterfeit a bunch of money. That would be a kind of a bizarre thing, but that's what they allowed Ireland to do. Mentioning Ireland, it's really weird to see. On one hand, it blows your mind. On the other hand, you can kind of expect it and see it coming. The Irish people are very upset. They did not want this big bailout that Europe pushed on them, and that the politicians accepted on behalf of the Irish people. So the Irish people threw out the Irish government. They'd had one party there that had been in power for a long, long time, and it was very entrenched. They threw them out. The other party said, "We will not do this kind of a deal with Europe. We will not saddle the people with this enormous amount of debt just to bail out bankers who made bad decisions." Sound familiar? But so they had a new election. As soon as the new parties came in, they basically said, well, we changed our mind, and they did agree to the deal with Europe. They did agree to take on all this new debt. They may get like a 1% cheaper debt, but they have saddled all the people with this debt. So the Irish people threw out the party that had agreed to this, and they just brought in a new party that agrees the same thing. So you've got a political class that's aligned with bankers, and they're completely at odds with the people. This is happening around the world, particularly the West right now. Similar but different situations in other parts of the world. Sounds very similar to what's going on here. Iceland was able to throw these people out, and they're doing amazingly well because they refused to bail out the bankers. The reason, and now I'm going off script here, but this is same thing. It's taking place in Greece right now. It's a similar situation throughout all of Europe. All these so-called pigs countries that are spending far too much money, they have far too much debt, far too high of deficits. Europe wants to bail them out because the big banks of Germany and France, all of the strong countries, have lent a tremendous amount of money to these other countries, which was stupid loans, but they did that thinking, well, if they get into trouble, then Germany will bail them out. Well, now Germany and France and Netherlands, they're stuck in this situation where they feel like they have to bail them out, because if they don't bail them out, the banks in those countries are going to go under because they've loaned too much money to these countries. And now, since the European Central Bank has been bailing out all these countries, they're in a similar situation where European Central Bank would go down, the banks of these individual countries would go down, and it would be very difficult on the economies of these strong countries if these weak countries are allowed to go under. So the strong countries are forcing this extra debt on these weak countries to try to save their banks. But let me ask you a question. If these weak countries have a problem of too much debt, what good does it do to give them more debt? How does that solve the problem? That's the reason it was over a year ago that we were talking about the Greek mess, and now, what's it been, 13, 14 months, 15 months later, we've got a Greek mess. Well, guess what? We just gave them a bunch more debt. Now they have more debt than they had back then, and they have a bigger problem. So giving them more debt isn't going to solve anything. They're getting ready to give them even more and more debt. They're offering to do this, as long as Greece agrees to lower the amount that they are spending as a government. They're called austerity measures. If they lower what they're spending, then they'll give them this. Here's the problem with that. All these countries are socialist over there, much as the United States is, but Greece particularly is horribly socialist. So half of the GDP of Greece, half of the economy is based on government spending. Well, if the government reduces their spending, the economy is going to tank. And therefore, Greece is not going to have any extra ability to pay off this even larger debt that they've now accrued. So Greece is in an absolutely no-win situation. The best thing Greece can do is bail out of the euro, and therefore they default on the debts. The people that loan them money, they shouldn't have. They made a stupid loan. They should go under. Greece should be allowed to recover. But that's not what the bankers want, and so Europe is refusing to let that happen. It would be hard for all of them, but guess what? There's no easy way out of this anymore. We've gone way too far down a bad road, and now we're stuck in it. And so they're going to try to kick the can down the road and just hope that a miracle happens down the road, but there's not going to be any miracles. Okay, I think I've covered that. I just think I covered several points here, so I'm going to see what I didn't cover. A lot of these countries. So the countries that have already been bailed out are Ireland, Portugal, and Greece. Again, they're going to need more, but they've already received a bailout. The big countries, Spain and Italy, are coming. The Spanish credit default swap numbers are showing that Spain's coming soon. Italy could end up being first. Who knows? They both have serious debt problems. Their economies are not going anywhere. They're stuck in neutral. They'll probably be shrinking soon. They're in trouble, and those economies are massive compared to the three that have already been bailed out. I think I read that Spain is twice as big as Ireland, Portugal, and Greece combined. I think that's right. So it gives you an idea of how difficult it will be if Spain or Italy needs to be bailed out, because they're massive, and so instead of being one of the bailer outs, now all of a sudden they're one being bailed out. There's just no countries left to bail them out, and they're not big enough to do so. Oh, and by the way, when I say they're getting bailed out, IMF is involved with that. The United States is the biggest contributor to the IMF. So when I say Germany's bailing them out, well, the United States is very much a part of this. There's been elections across Europe, and a lot of the Northern European countries are fed up with doing this. Imagine if you're a German and you have to work until you're 65, and you're being told you have to bail out the Greeks because the Greeks retire at 40, and they need to be bailed out because their system isn't working. Well, how do you feel working till you're 65, so bailing out the Greeks so they can retire at 40, living on the beach and just enjoying life while you're working to bail them out? Well, that's basically what's going on, and the Northern Europeans are kind of sick of it. It's, the people that are against them say, oh, well, you're mean-spirited, you're selfish to not want to bail these people out. Well, they're actually just smart. It doesn't work to bail them out, as I've already covered. So why should they be put into tremendous debt so they go into a lot of pain to pay for these other people who are already going to go through pain one way or the other? It's a ridiculous idea that everyone should walk down this road. the whole big reason for it is the pride of the people that have built the euro. They don't want to say it's a failure. It is a failure. It's going to be a failure. There's no way out of that, but they don't want to admit it. So they're hoping to go a little bit further down the road. So anyways, in Finland, which used to be the model European country, there's a huge victory for the True Finns, which used to be kind of an obscure party. They came very close to the leader of the True Finns becoming the prime minister in Finland, because the people are so upset with this. So you're seeing that going on in elections across Europe. And it's ironic because they agree, even though the people in the south or the peripheral and the heart of Europe or the north, they really disagree in a lot. They come from very different places, and yet none of them want these bailouts. They can all agree on that, but the politicians and the bankers are working together to make this happen. Thousands of Greeks are migrating into rural areas to live a self-sustaining life. They just can't make it in the city anymore. They're buying tons of gold, they're buying land, they're nervous about money, and they just can't make it in the city anymore. I think we're going to see a lot more of that here too. There's a member named Smagi of the ECB Executive Board who actually admitted, because I'm telling you exactly what's happening, but they don't usually say that. They actually act like they're much more noble. But he admitted that the bondholders of these pigs countries will not take haircuts because their banking sector would be wiped out. And let's see. There's been protests all throughout Europe. All the major cities are having huge protests and riots, and people are upset. And again, the politicians and the bankers are against them. Norway and the United Kingdom have both stopped aiding payments to the euro countries. They see it's a fool's errand, and they're just not contributing. They're not part of the euro, so they can do this. But the other countries, like I think I mentioned Finland, that True Finn guy is very against sending money in, and so Finland became very close to not supporting. The Eurogroup president, Juncker, actually said, when it becomes serious, you have to lie. He got caught in a lie to the people of Europe. And he basically said that it was his duty to lie to people for their own good. That's a scary situation when you have, we know politicians do that all the time, but he actually admitted it. The euro's father, a lot of people think of him that way, Robert Mundell, favors rigging the currency exchanges between the US and euro. Isn't that lovely? It's all breaking down, and he doesn't want that, so we need to rig it even more. The more we rig things, the worse the collapse is going to be. It's already going to be very, very bad, but rigging things just doesn't work, as we see. Open Europe recently did a study and said the ECB, which is the European Central Bank, has accepted just horrible paper, the junk bonds, the pigs, sovereign debt, onto its books, and he said that, I think he said something like a 4.25% drop would make them basically insolvent, and I mean, they're there. French banks were put on credit watch due to their exposure to Greece and these other countries. CNBC.com's John Carney, I quoted that better than normal because I didn't really believe the quote, but he reports that 44% of U.S. mutual fund assets own short-term European bank debt. That's hard for me to believe, 44% of U.S. mutual funds. But his point was, watch out, that exposure could directly affect your investments. I still have a hard time believing that number. I wonder if you meant money markets. That'd be a lot easier for me to believe. Otherwise, it would certainly be a very small percentage of most mutual funds if it is true. Spin, I already mentioned that. I think I mentioned that. Well, that's all for this video. My next video, I'm going to talk more broadly about what's going on in the rest of the world. Again, if you haven't seen the Coming Storm video, then I highly recommend you watch that. It's free, and it gives you an idea of what's going on. This European situation is very similar to the US. The only difference is Europe can't just easily print because they have different cultures all tied together by the euro. But we're the next domino. It's very similar, their situation to ours. Hopefully you saw that as I read about it. But the situation is coming here next, and coming soon. Thanks. Bye.